Good evening, everyone. Welcome to the Lock in Your Success Trade and Market Update for February 3rd, 2013. We had another up week last week, although it was a little more choppy than it has been. It still continued. The market still continued to rise. If we take a look here at the SPX, we actually had three down days and 2 up days last week. The up days just happened to be a whole lot bigger than the down days, so as a result, we end up higher. I took in and drew another trend line in here. I came back. We've obviously broken up over this guy, so I came back, and basically we're just kind of fishing for anywhere where we can see where the market may want to turn around. And this trend line brings us a little bit higher. We are coming into this area. If we spread out to a 10-year chart, which is what we have to do to get to the all-time highs out here, which is the next real point of resistance, other than this trend line we just drew here, which we may or may not turn near. The markets are overextended. If we come back and take a look at the Dow, we have the same thing. We're pushing up towards all-time highs. We're only 190 points, or actually less than 190 points from all-time highs. I would be surprised if the Dow doesn't try and push to 14,198 and touch an all-time high. I would think the traders are expecting that. The SPX still has a ways to go, so I don't know that one's going to make it, but this is so close. You'd expect that to happen. As far as the NDX, we continue our flat sideways movement for the NDX. Let's switch out to a year. We continue to get this flat sideways movement. Despite that, I still think this may reach a little bit higher, try and come up into this range. But again, this is probably about as high as it's going to go, at least for the short term. The SPX, like I said, it makes sense. It's going to reverse right in around this area. It may come a little bit higher, and at that point I'd be comfortable saying it's coming down. The Russell, if we come out here, we are overextended. I don't know if you know it, but this day right here, last Wednesday, was the worst day that we had in the Russell since November of 2012. So all the way back here. This was the last time we got I wouldn't even call this a big down move. It was only like 11 points or something. But the last time we got a decent sized down move in the Russell was way back November 12th. So if you take these 55 days or so and you average them out, it's like 2 to 3 points a day on average every single day for the last 50 days. That is insane. It's a very smooth up run. Like I said, this is the biggest and hardest down day that we've had in quite some time. And that to me serves as a signal. Not only was it a fairly hard down day, it also broke this very, very aggressive short-term uptrend line. If we come into here to an hourly chart, you can see it clearly broke down under trend line and it came right back to it. And we'll have to see where it goes from here. It's possible we may push a touch higher. I'm still holding out that we are going to be at 890 at expiration. I do think that the markets are topped out, and we're probably going to pull back to this area. We may do it, before expiration, but I think we're going to be down back here sometime before expiration. May be wrong. The reason I think we may go a bit higher, at least intraday, is because we did not get that. We got a decent move in the Russell, but in the SPX, we did not get that high volume, really hard spike that we like to see before a market reverses, especially after a move like this. So we got a move here, but it was average volume. It wasn't any bigger than a whole lot bigger than a lot of the other moves, especially since we had a bit of a retracement. So, is it going to go yet? I don't know. Like I said, this move is just, it's way overextended, and it doesn't make sense, and I'm not comfortable. I certainly wouldn't be comfortable going long here. So, that's what I think of the markets. We're overextended. I'm just waiting for it to turn back. I do think, I thought last week we'd be down by the end of the week. We did have, like I said, the worst day that we've had in 2 months. However, that was bought right into, which isn't a real big surprise. What tends to happen at the top is you start to pick up some volatility. You start getting bigger down moves, bigger up moves, bigger down moves, bigger up moves, and then all of a sudden you start getting a fairly large down move after that. So looks like the reversal process is underway and starting. And again, I would expect next week to be down a little bit, but we shall see. All right, let's take a look at our positions. We'll first take a look at the M3 for February. What I did here is, and I'm not sure what days I did, but I've just been rolling these shorts forward. These were initially 850 butterflies. And the first thing I did is I took half of my 850 butterflies and I more or less turned them into 870 butterflies with 30-point wings. On Friday, I did make another adjustment here, and I took the remaining 850 butterflies and I rolled the shorts all the way up to 880, and I turned those into 880 butterflies with 20-point wings. So what I'm doing is I'm keeping myself theta positive, vega negative. I don't really want to roll this put out, because if I do roll that put out and keep my butterflies wide, I'm going to start creating a deep hole in this part of the graph. And with the way the market's going, it's not making sense. It can continue, and like I said last month, the prices have been pushing up into expiration. So, since we're running out of time, I don't want to create a hole up here. I'd rather just take this as a scratch if the market wants to hold up here or continue to go. So all I'm going to do is I'm just going to gradually take risk off of here. If I'm fortunate enough and we get a really hard up move, then I could just completely flatten my risk out and just hold the position. If we do come back into the range I think we're going to be in towards expiration, we'll make something. If not, we'll scratch it off to March and have a nice day. But this is the position here. Low risk. Like I said, any trading strategy you have, you're going to have periods where it does well. You'll have periods where you have drawdowns. You'll have periods where you're kind of not making a heck of a lot of money. This here, the extreme low volatility and the extreme up move in a market neutral trade that requires the market to pull back a little bit to make money, obviously is not going to make a ton of money here. Like I said, a lot of people did take wins on this trade. A lot of people took some losses, depending on how delta positive you want to put it. It's certainly you can make it so that it doesn't lose to the upside. I don't trade it that way, but I have students that do, and they've been doing very well despite this crazy move. I think most of us are taking close to scratches on this for the last 3 months. So, like I said, the tide will turn, our time will come. Just be patient and move on. As with any business, you have your ups and you have your downs. And like I said, this is the worst condition for this particular trade. And if you're breaking even in the worst conditions for the trade, then you're doing pretty well. All right, let's take a look at our. Oh yeah, so if the market stays up here, I'm just gonna, like I say, I'll continue to roll some shorts up and eventually it'll just completely take all my risk down, and that'll be the end of that. If it reverses hard on us, we get out and we move on. Okay, let's take a look at the February bearish butterfly trade. And bearish butterfly is a bearishly biased position, likes high volatility, likes chop back and forth on our markets. Until you get into this position, it doesn't like chop right now. Right now, we just kind of want things to be flat, but it makes sense that a trade that's called a bearish butterfly may be struggling in a market that looks like this. Like I said, this is a very large up move, as I'm sure you're all aware. We are on into expiration guidelines, which means we go out of the week with delta of around minus 250. And you can see here this is back in time till Friday afternoon at 3:30. You can see our delta is at minus 240 at this point, and that's how I went into the weekend. Basically, what I did this week is I just continued to add up here at the 930 level, and I did post all of those to keep my delta relatively flat. This is what the position looks like. If we get if the market continues to do what it's doing and just kind of goes up at a kind of a moderate pace, or if we flatten out, as long as we don't have any deep pullbacks, this position may actually be okay. We still have time to make money. If the market behaves, it'll probably be fine and probably make something to move on. If it does not, then we're going to be taking some sort of a loss. My biggest concern here is not the upside. I think we're way overextended. Any up moves are going to be relatively short-lived, so chances are we'll probably be okay on the upside. The bigger concern here is the downside. If we get a really hard down move with a volatility increase, then we're just going to have to get out of this, and we'll just trade it in March, which we're already in. So this is this position here. I have 10 890 put butterflies, 10 910 call butterflies, and 8 930 call butterflies. And like I said, we're in expiration guidelines. Our March bearish butterfly is here. We're at, it's basically just a set of 10 900 butterflies. We have an add point at 920. Absolutely no concerns with this trade whatsoever. Even if we get a hard down move, should be able to stay with this even with the low volatility and a volatility increase. So I'm not terribly concerned about the downside at all. I'm certainly not concerned about the upside. I just really love the position here. So so this is looking good. The chances of us getting fully scaled in all the way to 940, pretty darn slim. So this is nice. Those are the bearish butterfly and M3 trades. We also have the February rock trade, which is coming along quite nicely. It's right here. It's pretty much at break even, down a couple $100. Really, if the market continues to trend up, that's going to be the best case scenario for this. If the market continues to trend up and hang up in this level, by the time I get here, this will be a really nice month for us. Should the market decide to back off, like I think it's going to do, it's going to be a little bit harder. I'll have to back out of these upper butterflies. But this is what the position looks like right now. During the week, what I did is I gradually have been adding in our 940 butterflies as our delta gets over minus 250. And it looks good. We have 10 880 butterflies. We have 10 920 call butterflies. And we have 4 940 call butterflies. And like I said, we're around break even. If we have a hard down move with a volatility increase, that's the only thing that's really going to beat this thing up. Other than that, we should be okay. It may not be a profit target month, especially if we run back into this range, but it should be a good month nonetheless. Okay, and then we have our V trades. Now, last week, I showed you the February V trade. I forgot to show you the March V Condor. So let's go into this here. This is the February V Condor. This position looks like this. Obviously, if the market continues to creep up and stays under 920, this is going to be really nice. If it shoots back in here, I'm just going to close the thing down, call it a day. If it stays here, as long as it stays up here, we'll stay in the trade. But we have like a $5,000 profit target here. We're at 4,200, and this is looking really nice. No concerns whatsoever. There were no adjustments to this all of the whole trade. So this has been just kind of sitting here since we put it on. If we take a look at our March V Condor, again, no adjustments whatsoever. And this trade typically requires very few adjustments anyway. You kind of put it on a sit here. Right now it's up about 1726. If we take a look at the position, this is what it looks like. Should the market continue to creep up, then that would be very good for this trade. Comes back into here, we will make some adjustments back in here. And of course, if we have a hard downside move, then we'll have to make something on that end. But this is what we look like, and everything's going well. And that is it for the trades. So, market opinion, this is one of the few times where I say, we're overextended. Who the heck knows how high it's going to go? It is showing signs of a reversal, and I do still think it's coming down. I just don't know how high it's going to go before it comes down. I would say, certainly very soon. So, and that's all I have for now. I'll keep you updated with any changes. Thank you, and good night.